Hi, this is Joe Rabil. I'm going to talk about the SP 500 Index, the QQQ, and I'm going to look at a few key sectors. I want to discuss what it's going to take to get the market out of this slow upward grind. Let's go into the charts, but I want to first make mention again, repetition is the mother of skill, so I like to go through these same conditions that I think are very important. If you're going to look at the market and try and identify what's taking place, there are, I believe, four key elements to take place every time you want to go through and see how you feel about the market. So number one is a trend, and momentum is included in that. I like to look at it in multiple time frames. Number two would be volatility conditions. Three is the overbought, oversold condition. And again, I would recommend to do it in a couple different ways. And then number four would be sentiment. And, I think you have to pick a sentiment indicator that you can follow, that you can get a hold of easily and that you like. As I've mentioned, I like the Investors Intelligence numbers because I've been using it for such a long time. I'm very comfortable with it. But there's a lot of different approaches. You have to spend some time with them and get used to them. Let's go ahead and get into the chart. I'm going to start with the S&P in 4 time frames. Nothing much changing on the monthly chart, but hey, we did make it to a new high. I mean, we did eke out a new peak. That prior high was taken out, and we did it, and it took 1, 2, 3, 4, 5 months. So we've been marching our way higher, and I would sort of consider that to be an overbought condition after running as far as we've run to break out. We're pretty good distance away from the 18-month line, but the bigger issue is we've made such a big uninterrupted move, and so on this time frame, I really feel like we're overbought. If we go and look at the weekly chart, it becomes a little bit more pronounced because we're pretty far away from the 18 and the 40-week moving averages. And so, I mean, I think the healthy thing to do here would be to consolidate, maybe back and fill, potentially pull back to these moving averages. But the reality is, even if we just paused here, I think that would be very healthy. If we go to the daily chart, I've already drawn in a trend line. And one of the things I wanted to point out on the daily chart is that, when you look at trend lines, you'd like them to be a little bit more like parallel to the 18 and the 40. If you can find a trend line that mimics the slope of those moving averages, I think you're going to get a more realistic idea of what the trend is. Sometimes it doesn't work like that. If the market just takes off to the upside, then you're not going to have the slope of either one of these moving averages. But I noticed a lot of times that if you connect some bottoms, a lot of times you'll see a parallel nature to the moving averages, and I do think those are a little bit more realistic and give you a little bit better idea of what is actually taking place. So if I go back and look at the ADX, I still think we're okay here. The momentum signs on that are okay. MACD is still pretty average, but we're not doing anything wrong yet. And again, if I go back and look at this volatility number, the black line or this dark gray line is the average true range for the daily ATR of the S&P, and it keeps declining below its moving average. We're not going to make any real meaningful turn, I don't think, until the volatility grows enough to get this gray line to start popping to the upside. We need to see bigger bars out of these daily. We need a higher range, a greater range. That's really what it's going to take to get things to turn around here, in my belief. So I think that's a pretty key element. But if you go and look at this trend line, and then we go to an hourly chart, I've actually got the trend line is actually referenced down here. You can see that. So there's a little bit of error on the hourly chart between where the support line is and where price is right now. And as I mentioned the last time, the ADX really hasn't been keeping pace, and we started to flatten out. We had lost momentum the last time I spoke, and now we've just kind of gone sideways. I think we could draw the trend line in here and see that we broke the trend line, and now we're rallying back up to test this high. So I would be, again, putting a reference point here. If we came back down through this low, especially with new momentum, confirming momentum on an ADX basis and some volume, then I would sort of feel like the target is probably this trend line on this time frame, which will probably end up being the 40 on the daily chart. But just keep something in mind. If we go back to the daily chart, if you break this trend line, the odds are we're going to be breaking the daily 18, and the target from that break, a confirmed break of the 18, would be the weekly 18 MA. So you keep, and again, I know I'm repeating myself, but the goal here is to understand that if you keep using these 18s to give you an idea of what time frame is doing what, you get a real good sense of what your risk levels are. So right now, I would tell you that 33.32 is the 18 on the daily chart. That's probably our short-term risk based on the way this is set up. And that would probably meet up with the trend line. If that actually creates some type of a breakdown to the on the 18 on the daily chart, then we're going to start looking for a bigger move down to the weekly. But again, if I go back and look at what's taking place on a volatility basis, I'm really not expecting any type of significant move or break through the 18 on the daily until we start to see bigger bars develop. These quiet bars are just not going to be big enough to create any kind of a real breakdown right now. I want to switch over and look at the Qs, and we can pretty much just look at this one chart, and I'm going to switch it back to our standard mode. 18 and 40 are pretty parallel, and if you notice, I've already drawn the trend line in, and it's connecting some key bottoms that we've made, some reversal points. And if you notice that the trend line is parallel with the 18 and the 40, and the 18 and the 40 are pretty parallel. So this is still a solid trend. This is the same thing I mentioned last time. I just don't see the type of movement that's suggesting a big reversal taking place, right away. We're going to need to see an increase in volatility here as well. But more importantly, if we shoot up to the upside and the 18 starts to move at a faster rate, then I'd start to feel like we're reaching some type of a climax. Or if the 18 if price ends up breaking down through the 18, causing that to roll over, then we also have some risk. But right now, based on the conditions and the fact that it just keeps making higher highs and higher lows, there's really nothing to do but to let it keep trending. Let's take a look at the XLI. So I want to switch this back and look at it on a weekly chart, because, in fact, let's look at the monthly, because what's taking place on the XLI, I think is somewhat constructive. So this is the industrials, and they've made it back through the 18 and the 40 month moving average. You can see they're trying to push through. They haven't closed above it, but they've made pretty good progress getting through. And the zero line, the MACD looks like it's trying to hold the zero line as well. So this to me is somewhat constructive based on what we've been talking about. And again, if we look at the weekly chart, you can see we're making a higher high. So this is the type of thing I wanted to start seeing, is these higher highs and higher lows out of something like the industrial index. Now, if we go and look at the financials, notice how we didn't exceed that high. In fact, we failed at it and look like we're kind of reversing back down. We're sort of failing at the 40. It's staying contained between this last support and resistance zone. And if we go and look at the monthly chart, essentially what's taking place is we're still just rallying underneath these moving averages. And now the 18 on the monthly is crossing down below the 40. And so I'm very concerned about what's going on here, because while I recognize growth is really what's causing a lot of the movement in the market, and this is considered more value, I have a hard time believing the market's going to make any real significant moves to the upside without the financials participating, and especially the banks. I mean, it can happen, but it's pretty rare that you make a big move without them participating to any significant degree. And I don't really need these stocks to outperform the tech. I'm not saying that they have to take over a leadership role, but if they're not going to participate at all, I just feel like it creates a lot more a riskier condition for the market. And so that's to me is a fairly significant concern that I think we got to keep an eye on. And I think the way it would play out is we'd consolidate a little bit more. This would keep pushing higher on a weekly chart, and 18 might even cross back above the 40 without any real significant upside progress, and then we'd have the potential for an opposing trend reversal to the downside, with price risk would, I think, increase pretty substantially, and not only for this index but probably for the market too. So that's the update for this week. We'll talk to you soon.